Normally, when we invest in the stock market, we want to be confident in our trades. But I have some very good reasons why you're going to want your confidence shattered right now. Because as bullish as we want to be, sometimes we just have to wake up to the reality of the economy and realize that things aren't all rosy. Even bulls are now starting to get worried that this bull run might not continue. The stock market in the first 6 months of this year had one of the biggest rallies in the history of the stock market. And bulls are starting to wonder, is it too much too fast? Here are the 5 things that have bullish investors worried that this bull market might not continue. The first is that earnings season could reveal hidden weakness. Now, normally the stock market has its best month of the year in July. And yes, the stock market is not exactly off to a great start so far this July. However, normally the stock market really has its rally at the end of July, once companies start reporting earnings. Because normally companies beat earnings expectations and their stocks go up. And earnings season actually kicks off here on Friday. Now, if you missed yesterday's video where I went over what to expect for this earnings season, make sure you watch it after you're done with this video. For now, let's talk about what investors are expecting for this upcoming earnings season. Companies in the S&P 500 are expected to report a 7.2% decline in earnings for the second quarter, marking what would be the third consecutive year-over-year earnings decline. Now, normally, when the stock market is expected to show an earnings decline, stocks go down. But that's not what's happened so far this year. The stock market has rallied, and the market is now pricing in a very angelic scenario for earnings, which is making some bullish investors very reluctant to buy into stocks heading into earnings. Now, the risk here is that if earnings come in as bad as expected, or even worse, if earnings come in below expectations, that could trigger a complete shift in the market sentiment and could trigger a very rapid market sell-off. On the flip side, because earnings expectations are so low, it should be pretty easy for companies to beat those earning expectations, meaning we might still get that July rally after all. The second thing that has bulls worried is the fact that the yield curve inversion is deepening. When the yield curve inverts, it's a recession signal. And 1 year ago, the US bond market first started flashing a recession signal, but lately that warning has been getting louder as the inversion deepens. If we do enter a recession by the end of this year, which most economists think we will, that will be bad for stocks. Stocks do not rise during a recession. Stocks fall during a recession, and then they generally bottom out about 6 months after the Fed starts raising interest rates in order to get us out of that recession. The third thing that has bulls worried is the fact that global markets aren't looking too good. As the global economy struggles, this very often will put a damper on the US economy as well, because it means we're not able to do as many exports as we historically have been able to, and especially for those companies that operate multi-country or internationally, such as Apple and Google and Tesla and many others. As other countries around the world enter recessions and slow down, this hurts earnings of US companies. And so this is a big fear for bulls that the earnings of US companies are going to get hurt by a global slowdown. The fourth thing that has bulls worried is more trouble from higher interest rates. The first warning that there might be an issue with rising rates came last fall when rising rates sparked turmoil in the UK. Then we had the Silicon Valley Bank collapse, followed by a number of other bank collapses in March of this year. And many investors say they are now nervous about what could break next. The fear is that banks are not out of the clear yet and that there might be more trouble ahead. We'll talk about that in 1 second, but first let's get into the fifth thing that is worrying bulls. The fifth thing that has bulls worried is the fact that the US stock market looks stretched, that is, overbought. Over the past 9 months, investors have mostly been buying the 8 megacap tech stocks. This crowded positioning has stirred worries that the US stocks could be vulnerable to a rapid reversal. 8 stocks in the S&P 500, Alphabet, Amazon, Apple, Meta, Microsoft, Netflix, Tesla, and Nvidia, now account for 30% of the index market capitalization, and it accounts for more than 50% of the NASDAQ 100. Tech's influence, combined with crowded positioning, could magnify moves if the market sentiment shifts and investors try to simultaneously exit positions. Finally, FOMO, or fear of missing out, is in full swing, and as Warren Buffett says, be fearful when others are greedy. So those are the 5 things that have bulls worried that this bull run might not continue. Now, let's get into some of the individual news that came out today and talk about some of the other factors that are affecting stocks. The American banking landscape is on the cusp of a seismic shift, and investors should expect more pain to come, possibly in the form of more bank collapses. Rising interest rates have already taken down a number of banks, and now losses on commercial real estate, as well as heightened regulatory scrutiny, will put additional pressure on regional and mid-sized banks, leading to a wave of mergers and bank collapses. Some of those pressures are going to be visible as regional banks disclose their second quarter results this month. It looks like I'll be finishing the rest of this video with my baby boy here, since he's now up from his nap. Another thing that's really interesting right now is the fact that home prices are hitting new highs once again, as high rates have put a squeeze on supply. This is one of the things that's keeping inflation from going down. Now, yes, headline inflation's been going down, but core inflation has not been going down, and prices are supposed to drop, yet home prices continue to rise. In other news, the U.S. Apparel Trade Group has called for a recall of Canadian Parliament as port strikes enter their 10th day. So it's not just U.S. ports that have workers on strike, as workers are now striking in Canada as well. And this has caused renewed supply chain worries over fears that prices might start rising once again as inflation comes back. An article came out today saying that Disney World has not felt this empty in years. Disney executives responded saying they have expected weaker earnings from the U.S. parks this year. Finally, Apple supplier Foxconn has pulled out of a $19.5 billion India chip project. Apple was hoping the Foxconn would start building a factory in India in order to diversify away from China. However, that now looks like it's not going to happen, which could hurt Apple in the future if some China shutdowns occur once again, or if US-China trade regulations don't work out so well. Now, in yesterday's video, we talked about some of the things that I'm going to be adding to this YouTube channel later on this year. In addition, I've got some other cool things coming out next year. And while you wait, I want to encourage you to come join us in the coaching program where I can teach you how to trade options, how to buy and sell different types of stocks, as well as some single leg ETFs and all kinds of cool things that we're doing over there in order to make money as the market goes ups and downs and kind of trades flat and does all kinds of weird things. There are ways to make money no matter what the market is doing. So I encourage you to come join us in the VIP Discord. If you want to get more information on that, go to weprofitdayandnight.com. That's weprofitdayandnight.com. Now, if you do decide to get more information, I want to let you know there's a little bit of a wait trying to schedule a call with the onboarding specialist at this time. He is backed up with an influx of people that are attempting to join. So please just be patient and we will get to you as soon as possible. All you have to do is click the Start Learning button for more information and to schedule a call with the onboarding specialist to get on the wait list to get into the coaching program. If you got a lot out of this video, then be a good friend and share this video with your friends and family and on your social media pages so that they will know what's going on in the market as well. And don't forget to hit the like button and subscribe. And if you have not yet watched the earnings preview video that I released yesterday, make sure you go watch it here.